Everyone likes to talk trading strategies, break out this, dip buy this, manage your risk this way, do this, do that. But one of the lesser talked about strategies, maybe because it's quite simple in nature, is relative strength versus weakness and how we can use that to our advantage. So in this video, we're going to do exactly that. What is relative strength versus weakness and how we can use it to our advantage with plenty of examples right here, right now. Now, disclaimer, this is more of a concept and not necessarily a specific strategy, because you can't just say relative strength and weakness is my strategy. Oh, that stock's relatively, weak, I'm going to short it. Or that stock's relatively strong, I'm going to long it. I mean, in theory, that's kind of like the basic concept of what you would want to potentially do, but you need to have some sort of trigger, some sort of mechanism that allows you to take that trade, right? Beyond just strength and weakness. But we can still use strength and weakness to frame the trade and put us in the higher probability stock, futures contract, vehicle, whatever we're trading on that given day. Now, trading, of course, is hard. It's not easy. Most people are going to lose money in doing so. This video is hopefully going to be a way that could help frame your own creation of your own strategy utilizing relative strength and weakness. So what is relative strength and weakness in a nutshell? What we are looking for is we need to be comparing something. We can't look at, relative strength and weakness is not useful if you just look at one thing. If you just look at crude oil, if you just look at the S&P 500, it's not going to be helpful. If you just look at Apple stock instead of a couple stocks, we're not able to compare. And so we need to be able to compare. And this works very, very well if you trade a certain type of vehicle. And when we say vehicle, it could be futures, it could be options, it could be stocks, forex, currency pairs. If you can pin a couple back to back that you like to trade, now you can be talking strength versus weakness. If you can't do that and they're not necessarily related, the vehicles you are comparing that you're looking to potentially trade, it's not going to be helpful. Pinning crude oil versus the S&P versus a currency pair, is that going to be helpful? You're talking like three different markets here. Try to keep things same market, same country, maybe the same sector if you're looking at stocks. That's the first thing to look for. Now, the best way is to show you. So I'm going to show you some examples of relative strength and weakness, looking at futures and looking at stocks as examples. And then hopefully that's going to give you guys a great starting block when it comes to using relative strength and weakness in your own trading. All right, so now here we are on my TradingView platform, and what we've got in front of us are the S&P 500 E-mini futures, the NASDAQ 100 E-mini futures, and the E-mini Russell 2000 futures. So what we are doing is we're comparing the S&P 500 to the NASDAQ to the Russell 2000, okay? And what this is going to do is it's going to give us an inside view as to which sector of stocks, if you want to call these sectors, you can even go deeper beyond this, or which side of the market is seeing the most strength or weakness. Now, what do we got right now? Well, what we have right now is quite clear, is we've got a downtrend, right? We are trending down across the board for everything. But how we determine relative strength and weakness and how we can actually trade this, if you were to use, let's say, a breakdown strategy, is we're looking for the first of these three to break support and to potentially make that next leg down. Now, you can compare them percentage-wise, so you can say, oh, well, if I were to go back in time and all I did was go from this recent rally right here to where we currently are, the S&P is down 6.65%. I can jump over here and see, okay, the NASDAQ is down about 8% to where we are right now. And the Russell is down from this recent rally to here, is down about 8, almost 9. So the Russell's down a bit more. The Russell is slightly weaker on a percentage scale. Now, if they're close on that perspective, you can still identify relative strength and weakness by identifying a breakdown or breakout. And in this case, what do we see? I think it's pretty nice and easy to watch. I think it's pretty nice and clear. What we have is the relative low, right? So we had this big move down, the S&P bounced and pushed, right? Where was that low? I'm going to mark that low, okay? Same thing on the NASDAQ, right? Push down, bounce up. I'm going to mark that low right there. Actually a double bottom, two of those candles, and then we broke that later on. And then the Russell right here. And so what I'm going to go do is I'm going to say, okay, which one of these breaks first. Now, ideally for a breakdown strategy, I want to be doing this before it happens. Like I'm noticing weakness and I'm saying, okay, I'm marking these levels off. Which one breaks first? I can set alerts and then I can take the breakdown trade on whichever one breaks first. Because if I am trading on the short side, I want to be going A with the trend and then B with the weakest vehicle, in this case, S&P, NASDAQ, or Russell futures inside of that trend, right? So what I'll notice is that, okay, the S&P broke down around the 23rd, then again on the 25th, the NASDAQ on the 23rd and then the 25th, okay, kind of the same thing there. The Russell on the 19th. And so a couple of days before the S&P and the NASDAQ, the Russell broke down. And so that's the example, and that's exactly where I'd be looking to take that breakdown short. It's on the Russell. I've identified the trend to the downside. I've identified the weaker vehicle out of these three. And now once we get the breakdown, I play that one. Now, in this case, you could have waited for the breakdown on the NASDAQ, waited for the breakdown on the S&P. However, what you would have noticed is that you technically got these little wicks, these little fake outs. So the move wasn't super clean, right? Whereas on the Russell, once we broke down and we've been just kind of slowly pushing lower, 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 a much cleaner trade, an easier trade, and we've got the higher momentum vehicle. Okay, so let's do this again. On the left, we have Apple, the middle, we have AMD stock, and on the right, we have NVIDIA stock. Now, we've actually got very similar charts here, right? These charts look quite similar, right? But what do we see on these charts? Okay, we can identify lower highs, generally speaking, in some sort of downtrend. We can identify lower lows, right? So we can see that there is a bigger picture trend to the downside here occurring across all of these guys. So you're like, okay, kind of scratching your head. Is there an edge? Do I have an edge? Do I have relative strength or weakness? Well, let's go off of how they closed out this past week, because we are now filming this video. The markets are closed. How did they close out the week? Now, all of these stocks have not had earnings yet in this recent or in this next earnings cycle. And so going into this, what we notice is that we have bounced up and closed fairly strong here on Apple compared to the prior day. Closed decently strong compared to the prior day on AMD, but not so much on NVIDIA, closing a lot closer to the recent lows. And hey, NVIDIA is also closing underneath the prior lower low. So we have is that AMD is actually above that recent lower low, and Apple, same thing, actually bouncing above that recent lower low. So if I were to pick across these three, what I have is better bets on NVDA to the downside. Now, of course, earnings is a crapshoot. NVIDIA's got earnings not for a couple of weeks, so there's plenty of time for a potential downside trade here if we get continuation, but that's exactly the same thing. I would be looking for what gives me the signal that this stock is weaker than the other two in the tech sector, as we see with Apple, AMD, NVIDIA, and then pinning those two head to head, playing with the trend of the downside. I would, if shorting, potentially play NVIDIA on the short side as it is the weakest in a weak sector. Now, there's no guarantee. We would need to have some sort of trigger or some sort of strategy, ideally, in order to play these, where you want to play a breakdown or a back test to some sort of maybe moving average or something like that, or even a candlestick pattern. But this is just an example of how we can use relative strength and weakness to put ourselves in a better position on the better side of the probabilities to potentially make money in trading. But again, nothing is guaranteed and nothing has to work. However, play this out over time, track this in your own trading journals, and you'll be able to see that you might have an edge with your trading strategy utilizing relative strength and weakness. Thanks so much for watching. Thumbs up button, consider subscribing, and we'll see you guys in the next video. Peace.